morning again. Uh, in this video, I'll be talking about gold and BTC. Uh, as we have been analyzing these particular pairs for the past weeks now. So, looking at this gold on 4 hours time frame, clearly we can see we have this symmetrical triangle, and the price has been respecting this support trend line. Every time we had a touch at this support trend line, price always bounce back. So this is the fourth touches, and at the resistance level, we only have these two touches. So my expectation was for gold to come and retest this resistance trend line to make to give us the third touches, and the cost of doing that, after this level, I'll be expecting a sort of consolidation before we have the massive break out to the upside. So that's my expectation on gold. And remember, this is 4 hours time frame. So why do I expect gold to come to this area initially? I can see I can see this bunch of liquidity built around this area. So price has been rejecting these particular areas to build liquidity. So, and in the cost of this liquidity build, it is very important for you to understand that price will definitely come back to take out all the liquidity above all this resistant area. There's a bunch of seller around this area to push the price down. So that was what happened in this particular area. So let's look at the current situation. So at this level, we have a break of structure to the downside, and then we have this break of structure, and price immediately make push up, take out this high that gave, that generate the break of structure. So we have this change of character right here, a shift in market structure, or you can call it market structure shift. So anytime you have a market structure shift, which is the same thing as change of character, you are expecting price, using your Fibonacci tools from the swing low to the swing high, you are expecting price to push back to your discount zone. That is where you will take your entry. But taking your entry from a discount zone is not even enough. So you have to see, if price came down to your discount area, what do you have that is very, very important in this area that price can pull back to? So I can see this order block. So we have this order block, and before the price tap into this order block, we can see this massive break of structure, or you can call it liquidity sweep. So I use my X to represent liquidity sweep, and if you look at this structure, price has been giving us series of higher lows, lower lows, higher lows, lower lows, and so on and so forth. So this is simply uh, a bullish structure. We have this impulse move, bullish impulse move, and this is correction. So price break above the resistance trend line. So let me take all these out. Price break above the trend line, this resistance trend line. Remember, this is a liquidity sweep, and this was the current high. So we are expecting this current high to be taken out. So immediately the price took out this high. It signals another shift in market structure. Okay, and after shifting this market structure, price left this order block behind. Which was exactly area I was expecting gold to push down to before the bullish continuation. So in the course of last week, gold came down here, consolidating a bit around this area of interest. And now, so another thing, let me take all these out for you to see. more clearly. So another thing that caught my attention when price came up to this area. So that thing was, price took out liquidity above this area, and immediately we have this massive drop to this area. Price push up, came back again. Now let's look at what happens in this particular section, this area. So we have this break of structure to the downside, which is a lower low. We have this break of structure. So every time you have a break of structure, you are expecting price to come back to your POI. We have this fair value gap here. We have this fair value gap, and we have this extreme POI, which is an order block. So price through this week to take out all the liquidity above this area. Eventually, we had a push to the downside, which led to so we have this equal low right here. Excuse me. Price gave us this relatively equal lows. So after giving us this relative equal lows, that equal lows serve as a liquidity area that will attract the price to come and grab. So eventually the price came down, grabbed the liquidity below this equal low. It's still within the order block. What do I mean by order block? The last bearish candle before the impulse move. So when we had that, price aggressively pushed the upside, giving us this candlestick pattern, which is in what is it called? Engulfing candle. So immediately we have this engulfing candle. This strong bullish candles simplify that there are a bunch of uh, buyers in charge already. So when we have this, price came down, giving us this came back, pull back. The purpose of this little pullback was because of this fair value gap, this mini fair value gap. Price came back to respect this fair value gap here. So, and we have this massive impulse move to the upside that led to the break of this resistance trend line. So after the break of this resistance trend line, price pull back to retest the trend line, also came back to this order block. If you go to smaller time frame, you will see the order block clearly. So in after that movement, let me take this out. After that movement, so I got in this trade at this area because I was expecting price to come back to retest this trend line, also to respect the order block here, and price did just that. So now we have immediately we have this new break of structure. We have this internal break of structure, and we have the major break of structure, right? So we have this major break of structure right here. So in this situation, I was expecting price. So I drew this area as a zone, resistance zone, where price has been rejecting. So in this situation, I was expecting price to come and retest that zone. So after retesting this zone, anything is possible. So the possibly price can retrace back, either to come and retest to this resistance area, or pull back to this order block, this mini order block right here. So that's my expectation. So now I'll mark this place as a resistance level where I'm expecting price to pull back to again, or probably come back into this order block, So this is an order block. Then now for more confirmation, if you pull your fib from this swing low to this swing high, is there any, this is the equilibrium and this is the discount zone. Is there any reason for price to come back to this discount area? If there is, then you can be expecting price to come back to this discount area zone, so before going higher. But Another thing I can be looking out for is if price eventually come down to this area and there's a liquidity below this area, so there's possibility of price pushing down a bit before going higher. So if you go to smaller time frame like 15-minute time frame, uh, if you see any form of shift in market structure or liquidity sweep around this area of interest, it simply means price is coming back to respect this particular demand zone before going higher. Okay, so that's what I have on gold. Lastly, let's go back to that 4 hour time frame again. So this is the major resistance trend line. Don't forget, this is a major resistance trend line. So if we have a break above this major resistance trend line, I mean, if price give us something like this, wait for the retest before you go higher. So in that situation, my first target, profit target, will be this high, and my second profit target will be this high. Then I'll be trailing my profit as the market goes higher. So this is my expectation on gold. Okay, if you have any comments about this, you can leave your comment in the comment section. So quickly, let's just check BTC. Is very direct, so I'm not going to spend too much time on BTC. It is very direct. So it is clear that BTC is in a, I mean, um, bullish movement, and after we have this break of structure, so after a break of structure, of course it is very logical to expect a pullback, right? And price gave us this symmetrical triangle at this high level. So symmetrical triangle in a bullish movement or a bullish or bearish movement, when you have a symmetrical triangle, is a symbol of either reversal or continuation. So it serves as a continuation or reversal pattern. So any area of this resistance level or support level, if you see a break out of any of that area, it signals that the market is going in that direction. So the only benefit, I mean, I can clearly see that it is in the side of the bull, I mean the buyers, because we have this impulsive move. So this is a bullish movement and price is consolidating. It could be a continuation, and in some cases price can pull back to take out all the liquidity or to fill all this imbalance right here, pull back to this area before going higher. So that is possible. So let's keep looking out and see what is going to happen on the BTC and gold. Thank you for taking your time to watch this video. Leave your comment in the comment section